As costs, labour and approvals collide, what hidden forces are quietly reshaping the future of construction in 2025? Hey guys, Andy here. There's a lot bubbling beneath the surface in the world of construction right now. And it's not just the concrete. Let me hit you with a question. Building costs are soaring, projects are stalling, and permits turning into reality TV one delay at a time. Or maybe you're just sitting there thinking, why does it feel so much harder to kick off a project in 2025? The industry is changing fast. There's a perfect storm brewing behind the scenes, and I'm here to break it all down. Big changes are underway, driven by forces most people don't even see coming. It's no longer just about the cost of materials going up or interest rates shifting. There's a bigger picture here. We're dealing with nationwide labor shortages that are pushing timelines further out, unpredictable changes in global trade that are making it harder to source materials, and approval processes that now take weeks, sometimes even months, before a single shovel hits the ground. All of these challenges are stacking up, and they're putting real pressure on how we design, build, and deliver projects in 2025. Let's break down what's really happening behind the scenes and why it's set to reshape construction across Australia. We'll use Rawlinson's latest data to crack open the numbers, track why productivity is slipping, expose the risk no one's talking about, and show you exactly where the industry's headed next. Curious what's happening in your city or what might hit your budget next? By the end of this, you'll know exactly where construction across Australia is heading, state by state, sector by sector. Let's get into it. The Rawlinson's Q2 update for 2025. Right now, cautious optimism. Government projects are keeping the industry moving, but cracks are showing. Productivity is falling, skilled labour is drying up, and costs still climbing. Every state's feeling it, just in different ways. Let's begin our journey in Adelaide, South Australia. South Australia's economy is ticking along, slow but steady, with growth expected between 1.5% and 2% this year. Inflation sitting around 3%. The bright spot? Material prices have finally stabilised. But here's the catch. Labour costs are still climbing, up 6% this year alone. It's no mystery why. The skilled trade shortages is biting harder than ever, driving up wages and dragging project timelines out across the board. Despite the pressures, development is moving. The state government's backing major projects, including a new 38-storey skyscraper. And the industrial warehousing sector is booming. But there's real vulnerability under the surface. South Australia leans heavily on imported materials, especially from Asia, making it highly exposed to global supply chain shocks. One disruption could send timelines and budgets spiraling fast. Bottom line, builders and developers should brace for a 5% rise in construction costs through to the end of 2025. Let's jump over to Brisbane, Queensland. Brisbane's construction costs are finally starting to level out, but don't get too comfortable. Activity's still running hot. The state government's been quiet on major spending this year, and while 2032 Olympics are looming large, they won't seriously impact the market until late 2025 or even later. Building approvals? They're steady, but nowhere near enough to meet Queensland's massive housing demand. Here's the stat that matters. Brisbane's facing a 7% jump in building costs this year, the highest in Australia, and concrete's leading the charge with placement costs surging 10%. Brisbane's key takeaways? The market's strong, but if a few big projects go to tender at once, expect prices to spike even higher. So while Brisbane's market stays red hot, let's shift gears and head to Canberra. The slowdown in residential construction that everyone saw coming, it's here. But there's a flicker of optimism. Some real estate players believe we've hit the bottom, and the buyer interest is starting to pick up, especially for apartments and townhouses. That said, labour costs are still high, resource shortages are stretching project timelines more than ever, and competition for skilled workers isn't letting up anytime soon, especially with a wave of major government and education projects in the pipeline. Bottom line for Canberra, building costs are climbing, expect a 5% increase through 2025. Let's head up to Darwin in the Northern Territory. Overall, Darwin's outlook is positive, but there's a shift underway. Government spending has slowed, now focused mainly on emergency services upgrades. Tourism getting a boost thanks to the recent federal election, and the private sector starting to gain real momentum. That said, the market's running close to capacity. Skilled trades, especially structural steel and electrical, are in short supply. That shortage is pushing up prices, especially on larger projects where subcontractor availability is tight. Just last quarter, steel prices jumped 4%. Bottom line for Darwin, expect a 5% rise in overall building costs through 2025. Now let's head south to Hobart. The construction scene here has cooled right down. Contractors aren't picking and choosing anymore, they're chasing for work. The private sector's gone quiet, costs are rising faster than what developers can earn back, and without a sudden spike in rental or property prices, which bring its own risk, a strong recovery isn't likely anytime soon. The government's stepping in with new projects, but big ticket developments like the proposed AFL Stadium are still clouded with uncertainty. If you're building in Hobart this year, brace for around 4% increase in costs. Let's move south again to Melbourne, Victoria. Here, there's some real positives. Supply chain pressures are easing, material prices have finally stabilized, and there's more competition in tenders, a healthy sign for the market. But the challenges haven't gone away. Contractor insolvencies are up, labor, skilled and unskilled, remains in short supply, and wages, along with insurance premiums, are still climbing. Housing and townhouse construction is holding, but nowhere near enough to hit Victoria's ambitious targets. On the upside, the build-to-rent sector is expanding fast, and there's real momentum in industrial, healthcare, and aged care projects. Forecast for Melbourne, building costs are set to rise by around 4.5% this year. Now let's fly west to Perth, Western Australia. The big headline, labour shortages, and it's biting hard. There simply aren't enough workers to meet demand, especially in trades like form work. It's so tight that the WA government's offering $10,000 relocation bonuses to attract workers from New Zealand. Materials have seen some relief, steel and rebar prices are down, but concrete and plasterboard remain stubbornly high. And here's a stat that hits hard. Right now, 25% of all business insolvencies in WA are in construction. As for costs, expect building prices in Perth to escalate by around 5.5% this year. And finally, let's wrap things up in Sydney, New South Wales. Sydney's still under real pressure. Building costs are forecast to rise by 4.5% this year, with a slow easing between 3 and 4% over the next couple of years. Labour shortages are a major driver here. Wages are climbing at around 3.5%, and skilled workers are continuing to head north to Queensland for better opportunities. Major infrastructure projects like the Sydney Metro and the Waterloo South redevelopment are keeping demand strong, but in the private sector, activity is definitely softening. There's cautious hope that interest rate cuts and easing inflation might help turn the tide. But for now, it's government projects that are keeping Sydney on its feet. All right, let's pull it all together. Think of construction right now like a relay race. Each state is running its own leg, dodging hurdles like labour shortages, slow approvals, and rising costs. Some are pushing ahead, others are slowing under the private sector pressure. But the baton, delivering new homes and critical infrastructure, still needs to move. And even if one runner falls behind national targets, especially for the housing, it slips further out of reach. Here's the reality. Public projects are holding the line, private developers are under pressure, squeezed by cost, labour gaps, and tight finance conditions. The same hurdles keep repeating. Labour shortages, approval delays, rising costs. How hard they hit, it depends entirely on where you are. The path forward, it's about investing in skills, speed up planning, boosting productivity, and embracing smarter, faster ways of building. Because the future of construction depends on how well it works together and how fast we adapt. If you're planning a project or already building, the question is simple. Are you ready for what's next? And if you ever need trusted insights to guide your next move, Rawlinson's cost data will always be here to help. If you found this update useful, we'd be grateful if you supported the channel by subscribing, leaving a like, and sharing your thoughts in the comments. It genuinely helps us grow and continue bringing you better tools, sharper insights, and real-world updates. And this is just the start. We've got new podcasts, deeper informational videos, and regular market updates coming your way, all designed to help you stay ahead no matter where you're building.